Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. This is update number 114. Happy Monday, everybody. In this video, I'm going to show you what I bought with my $100 deposit. And this buy is going to be based on my allocations within M1. So wherever we are underweighted is where that money is going to go. You can see the three slices I have in this portfolio. I'll leave a link below so you can see what is in those slices. But we can see right now, just look at the last year of performance for the portfolio. We are up 21.64%. We've had some ups and downs, but mostly ups. You can see a couple here. Fell down to 192, then down to 228. As you can see, though, we have a few troughs, but we just keep going up from there. And we're pretty much at all-time highs right now at the low $260,000 mark. We can see here's the total dividends earned over the last 12 months, $11,095.88. And let's go ahead, we're going to jump into the activity log so we can see what I purchased. You can see here there's 3 buys, but there's also 2 dividends that rolled in from Saturday. And the first one was a Vista for $26.64. Then Realty, which pays me monthly, paid me $13.03. So we're going to see those 2 buys are going to be called dividend drips. I'm just going to reinvest those back into a Vista and Realty. So we'll see the next dividend for these rise. And then we'll click here. We'll see what that one buy was, where the $100 went to. We can see right away it went to Apple. And today Apple was down 3% last time I checked. Looks like the outlook for the sales of the iPhone 16 were a little bit lower than expected. But that's okay, though. I think for the long term, as far as an investment, I think Apple is going to be a solid one. But of course, what I'm buying is not investment advice. I'm just kind of chronicling this and showing you what I'm buying, selling, and what I'm doing with the dividends and growing this portfolio. So that's the purpose of this video. What we're going to see, though, what the Vista drip, the Apple buy, which is not going to move the needle a whole lot because Apple pays like less than 0.5% in dividends, but it does pay a dividend, though, and Apple's been increasing it annually. So over time, I think it's going to be more significant. And then we'll see, what O added to as well. So we'll click on down there, go back to the portfolio. And then we're going to jump over to a Google Docs spreadsheet where I track all of my holdings. And I'll just show you the holdings really quick before we go over there. You can see there's 52 different positions in this portfolio. And this portfolio is about 15% of my total net worth. And that's the reason why I kind of have some individual positions. Before, I built most of my wealth with index funds like VTI, VTSAX, and VU, which are their Vanguard ETFs. And Charles Schwab, Fidelity, they also offer those low-cost ETFs as well. So if you have those, they're really all good. So I'm just going to scroll down here from the top. You can see SCHD, that's the largest position in this portfolio, and it's an ETF as well. It has about 104 different dividend-paying stocks in it. And then we see BST. This is a covered call closed-end fund, and this pays good income, and it pays it monthly. I'm not going to go through these individually, but I'll just kind of scroll through so you can kind of see those. There's Apple. You can see where it ranks in position to everything in my portfolio. And there's O there. And we'll see a Vista, right there is where it ranks. And this is, again, going from the largest position to the smallest position. And I've gathered these shares, not all at once, but, slowly over time. And just been adding to these, so the share count just keeps going up, in effect, which makes my dividend income go up as well. So it looks like ADP at the bottom is the smallest position at $794.25. let's go to that Google Doc spreadsheet, and everything on this spreadsheet is sorted right now by the pay date. You can see company ticker symbol, share price, average share price I've paid, the number of shares I own, here's the current market value, here's my cost basis, here's the gain or loss. The gain or loss expressed in a percentage, and anything above 25% will be highlighted in green. Here's the quarterly dividends paid per share. Here's the current yield, and here's the current yield on my cost. And here again, here's the pay date. And we are in September. Here are the dividends I've received so far. Do a quick count up. And so I've received $190.64 in dividends, but I have a lot more to go and some big heavy hitters in here. And mainly SCHD and BST. Those are going to hit hard at the end of this month and pay some large dividends. So again, $190.64. And I've put in the current dividend for Apple. So in November 16th, approximately, 3 months from now, since Apple pays a quarterly dividend, I'll be receiving $356, but that's going to go up because I bought the $100 worth of Apple. We're going to see how much it moved the needle. It's not going to be very much because, again, 0.46% is the yield, so it's not going to move the needle. But you can see Apple's a pretty good growth stock, and they do increase that dividend. So next May they'll also increase that, hopefully by 4%. Hopefully they're a little bit less stingy because Apple sits on a lot of cash. But I understand they're trying to make the business successful and not pay out too high of a dividend. But they could certainly afford a higher dividend if they wanted to. So just going over more on this sheet, you can see the next dividend, the dividend paid, that's in green. We're in September. So these in August, they're just going to go into November. Once the new pay dates are announced, I'll put in the new pay date and resort it, and boom, they go down to November, and they're just going to keep paying me. They just cycle and keep paying me over and over and over. It's not like these just pay me once and they're done like Aflac. No, Aflac's going to pay me again in December. It's just a never-ending, awesome cycle of dividend payments that just continue over and over. And not only that, they just keep getting bigger and bigger. You can see with Aflac and all these, I've reinvested a dividend. You can see how much it's grown. So with the 190 that's been received, 190.64, with the dividends reinvested in December, I'll be getting 191.98 from the same bunch. So that's not even with additional money kicked in. That's just the dividend drip in there. We can see the total dividends have been paid to me by each position. You can see how much like SCHD and BST have paid me, a whole bunch of money right there. And then I also track the increase because these companies are paying an ever-growing dividend. You can see Costco in April, they increased their dividend by 13%. You can see in January, American Express is even better at 16%. But you have some that are lower, like Verizon, things like that. They pay like a 2% was the last one they did. So you can see Verizon. But look at the next dividend I have waiting for me on November 2nd, almost $60. And when I do that drip, it's going to surely be well over $60 because it's going to buy over a share with that $59. You can see it's going to buy at least a share, and it's going to pay more than 68 cents more because it's going to buy a whole share and some. So there's the quarterly dividend to add into that. So that covers pretty much everything in the sheet. So I'm going to grab some data from M1, and really it's just the data over here on the holdings tab. And just starting with name, I'm just going to grab this. We're going to do a quick copy. We're going to do a paste. What that's going to do is it's going to take this data, and I'll show you what the data is at the top. And it's going to update in my sheet. So we'll have a new number of shares. It'll update the shares, which in turn is going to update the dividends for those three positions where I bought more stock, which is Apple, Avista, and O'Reilly. And then my average share price cost basis has changed as well. So those three things right there. And I'll show you how it picks up that data over here. And we're going to see this change. The 356 is going to go higher, maybe to 360. We'll see. As well as we're going to see, and Avista, these numbers are going to go up here. And then also over here, we're going to see this change, 1012.09 is going to go up, as well as the quarterly and annual as well. So we're going to paste this over on the M1 data tab. You can see how I have the shares, cost basis, and average, and it lines up for every position like SCHD, BST. Since I didn't buy more shares in those two stocks, it's not going to change those, but it's going to change the values for the three where I bought fractional shares of the Apple, Avista, and O. So it looks like it's done that. We'll go back to the dividend portfolio tab. We can see we've added about 20 cents there to the cash flow average. Went from $1,012.09 to $1,012.29. And it doesn't seem like a whole lot, but trust me, this adds up because I'm having events happen all the time where I'm receiving new dividends, every couple days. I'm dripping those in. I'm getting dividend increases, and I'm also putting money into the portfolio. That's two $100 buys per week. So let's take a look at the changes here, and it went up to a little bit more than I thought. So up to 368. So we're adding 12 cents to the next dividend for Apple. I'm going to scroll down here. We're going to take a look at O, and it was at 13, I think 05 actually. It paid 13.03, but we had a starting point of 13.05, so we added 6 cents really to the monthly income there for O. And then Avista, we went from 26.64 to 26.96. So it moved the needle a little bit more there for two reasons. It was a larger dividend at 26.64, so it was like 3/4 of a share. And then we can see also that the current yield percentage for Avista is almost 5%. So that's why it moved the needle more on that. So what we're going to do next is we're going to carry the new monthly cash flow average. But before I do that, I want to show you that today is the 16th, so tomorrow I'm going to wake up with two more dividends, and we can see the first is going to be Duke and Hershey. So I'll wake up and I'll have two dividend drips. They're going to happen tomorrow morning. So I'm going to have more Duke and more Hershey's. It's going to buy more fractional shares of those two stocks, and we're going to see the 14.50 and the 9.35 go up. And then the next day and Wednesday, same thing is going to happen. McDonald's is going to pay me $12.73. I'm going to do the very same thing. I'm going to drip those dividends right back into McDonald's and buy some more, and that $12.73 is going to go up. So let's go over to the monthly average dividend tracking tab. We're going to carry over that 10/12/29. And anytime I have an event, like there's a dividend increase, dividend decrease, I drip a dividend, I deposit and buy more stock, or I sell a stock, anything like that, it will change my monthly income. And so what I do is I put the events as a line item to show progress. And went too far there. So now we're at 10/12/29. And with that 12.29, that's an average, because this portfolio kind of it doesn't pay an even 10, 12, now 29 per month. The first 2 months of the quarter will pay a lower amount in the 600s, and then the last month is going to pay $1,500 plus. It pays a lot more. So I do is I take the quarterly average and divide it by 3, and that's how I get this average monthly dividend. So So even with this so far, in in this early in the month, we're about halfway through. We're already at moving the needle, $5.99 per month in additional income. So let's go over to my Dividend Tracker tab. And I've been doing these videos and tracking this dividend, or this dividend portfolio since January 2021, and putting the portfolio value as well as the dividends paid, and then the quarterly and the quarter-on-quarter increases, decreases, things like that. The only quarter-on-quarter decrease that really happened was it's all because of SCHD, and it's not a bad thing. It's just because of there's two reasons. In Q1, SCHD pays a lower in Q2. I should have been getting a SCHD dividend in June, but I'm going to receive two SCHD dividends in Q3. So Q3 is going to be really, really high. So that's artificial right there, that minus 25%. That's because SCHD was just, essentially paid a day late. So I just want to show accuracy in that. And we're going to see the quarter on quarter Coca-Cola, Pepsi, you know what you're going to receive. What are different. I'm going to put that last $100 in here because there was a $100 deposit. And here we are with the average monthly dividend. You can see for the most part, this just keeps going up and up. We're well over the $1,000 mark. But if SCHD announces a lower dividend, something in the 70s, I'm going to see a temporary lowering. I may be back in the 900s. I hope not, but it's a possibility. And here's that monthly increase of $5.99 for a month-over-month gain of 0.6%. It doesn't seem like much, but you can see when this goes over time, and look back here when I started, I did a big and we're over the $1,000 mark. And this is annuals. I could just draw this as like a little salary, a part-time job if I wanted to, and that's what it would pay on average over the year is $12,000. And even if I started pulling this money, it's going to keep going up due to those dividend increases. You can see here, there. $573. That's from January 2021, and it's just accelerated and ramped up like crazy. And then let's go over to my total net worth statement. We'll close out the video here. And like I said, my net worth is, it comprises more of, you can see these Vanguard like ETFs in here, the VTI, the VU, the VTSAX. Everyone's heard of that. Those ETFs are quite popular, and I recommend. So it's very low. So you can see here I have an IRA. Over here I have a small Roth brokerage account, and here's a taxable brokerage account, just all ETFs. Here's my current employer, and everything I'm investing in, it's an S&P 500 index through Fidelity. And that's a good one too, FXAIX. And we can see over at M1, in addition to my dividend portfolio, I have a large IRA over there. And this is pretty much my professional career minus the last 4 or 5 years with my current employer. And then here's the dividend portfolio at $260,000. And one, they have a 5% savings account, so I'm taking advantage of that. Kind of have my 1 year emergency fund over there. Then Synchrony, I like them as well, but they're only paying 4.5%, but I've been using them for years, so that's more like a 6-month emergency fund. And here's like a 2-month emergency fund over at Capital One. And here are my liabilities. Here is the current balance on my credit card, but I don't carry a balance. I pay it off about a week before it's due, so I don't pay interest, but that's what the balance is right now. And then my debt that I have is from my mortgage, and I want to get rid of this as soon as possible. What I've been doing is I've been incrementing every single month and paying $100 more on my mortgage, and who knows, I mentioned this before, I may use this taxable brokerage account and sell it. It's at 178. We'll see if the market keeps my expenses. And here's my total net worth, back over the 1.7 million mark. Dipped into, I was over the 1.7. I was like at 1.72 for a little while. Then we went down, and then we're back up. So it's just the nature of the stock market. It's cyclical. It keeps, it's a roller coaster ride. And but that's my net worth, and you can see where my net worth was November 2022. I really started tracking this, to the dollar pretty much, and it's gone up steadily, and that's because of what I am invested in, these tried and true safe investments, at least in my opinion. And those just with the stock market going up, you can see how it's just gone up. There's been no influx of money from an inheritance or hitting the two, so that counts. That's all I had to show you guys for the video. Also subscribe so you don't miss future videos. Next video will be my second half of the week buy, which will be on Thursday or Friday. And what I do is I pick 5 stocks. I'll pick 5 of these within my dividend portfolio, and I'll put $20 towards each of those. So thanks everybody for sticking to the end of this video. Again, if you got value from the video, please click the like button, also subscribe. I hope everyone has a fantastic week, and everybody take care.